disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for. There's the disclaimer.
Excellent.
And let me share my screen. While I'm doing that, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, the analytics. If you have a question, type it into that live chat on YouTube. Will's watching it. He'll read it back to me. And to give you guys a couple minutes to put in those questions, we'll start out taking a look at the pre-market report to see if we could get insights, what's trading in the pre-market hours, and then we'll move on to the questions. Okay, so pre-market report. These are stocks trading in the pre-market hours. Up here, we have a calendar view. This allows you to click on a historical date if you want to check out what happened in the pre-market hours on a particular historical date. Today, we're on January 8th. And so far, from a high level, this is what's going on. We got 461 stocks trading higher in the pre-market, 409 stocks trading lower. As far as volume goes, we got 182 million shares trading on up volume versus 64 million on down volume. And if we convert that volume to dollar value, we have $2 billion worth of stock trading higher versus $1.5 billion worth of stock trading lower. So just from that perspective, looks like the trading in a pre-market is leaning slightly bullish or with a bullish lean. Let's take a look at it from a couple more perspectives, and then we'll move on to questions. So I'm going to scroll down, and now we have these lists of symbols that are stock symbols trading the pre-market hours. We have our most active stocks, our biggest percentage gainers, biggest percentage decliners. We see here there are 65 stocks that made our biggest percentage gainers list, 99 on our biggest percentage decliners list. And to make this list, these stocks that are trading in pre-market hours, they do have to meet certain thresholds that we set because of the illiquidity in the pre-market. So we do have liquidity thresholds, volume, price change, and so forth. So any stock that does meet that threshold, if it's trading in pre-market hours and listed on a major U.S. exchange, it can make this list. So we could narrow this list down to a small group of stocks. And, just looking at this, there are more stocks that made our biggest percentage decliners list. And from that perspective, the indicator is slightly contrary to what we just saw. This looks like the pre-market trading has a slightly bearish bias. So we're going to try to narrow down this list now using the filters above. If you have a watch list, you can filter by your watch list using this filter. I'm going to use the ETF filter. And when we click on it, you get a drop-down menu to select from. We're going to choose SPY. That's the S&P 500 ETF. When you do that, the list below gets filtered by stocks that are holdings in the SPY ETF, which are the S&P 500 constituents. And here we've got 6 stocks that made our biggest percentage gainers list, 15 on the decliners. So that also indicates that the trading in these stocks have a slightly more bearish sentiment in the pre-market trading. I think there's some news on Boeing. That one I think popped up here, down 7%. So, well, I gave it a couple minutes. If you have questions, I'll take them now.
Nothing's popped in yet, D.
Okay. Let me default to SPY while we're waiting for questions, and usually, just default to SPY and try to answer some questions that I'll either get on comments or emails and use those as starting points. If we do get a specific question, let me know. So this question, had to do with the intraday analysis tool. Let me go here, actually. Well, actually, before I go to the intraday analysis tool, the intraday analysis tool, what is it? It's a tool that allows you to run statistics on intraday stock data. Okay, so sometimes you want to run an analysis. What typically happens intraday? All right, maybe not over a month or over a seasonal period, but you're curious, well, what happens let's just take the last hour of trading as an example. What typically happens the last hour of trading? Well, if you want to run that stat, if you want to answer those questions, you'll need data that covers the last hour of trading, right? You can't use end of day data to run that statistic, because the close to close data, open, high, low, close, doesn't have that data, right? So you need to basically run the statistics from, if you're looking at the last hour, from 3 to 4, then you would need data starting from 3 p.m. Eastern to 4 p.m. Eastern to run the stat. And well, what are some use cases for it? At the end of day, well, let's just take a 0 DT option. You might be looking at a bullish call, right? Let's say bullish call in SPY. So let's come down here. Let's go back to 3 o'clock. So this is on the options chain on Friday. We're not open today, but this is the options chain on Friday, and I'm going to go to 3 p.m. So when I click this 3 p.m., this brings up the options chain for SPY snapshot at 3 p.m. Eastern. So it still has an hour, before the markets close. You have to look till 4:15 actually with SPY. But this is what the options look like at that moment. So let's pretend right now it's 3 p.m. We don't know. This is what we're looking at, right? And we see that the stock at the time of the snapshot of this options chain. So right now I'm on the January 5th. So these were options that already expired, but if we're going back in time, right? So on January 5th options chain, these would be the 0 DTs. You could see it expires same day, right? And at 3 p.m., this is what the market looked like, right? That's a snapshot, still picture of the market at 3 p.m. So we have the option prices, we have the stock right here at 466.82. So we could say it's around, let's say 46. This is the closest strike, 467. And now we're looking at it, and let's say we have an analysis and we think that the last hour will be up or down or whatever, right? But we have a thesis. Let's do a thesis for this example, and let's say that we think the market is going to rally at the end of the day, the last hour. So, we might have certain questions, we want answered. And for those questions, we may need to look at more historical data. If I'm looking at an option and the stock is 466.82, and if I buy this 467 call, for example, for 46 cents, my question may be, well, how, if the stock does go up, historically, how often does it go up by enough to cover this cost? Because even if I buy it for 46 cents, I still need the stock to go up by a big enough amount, big enough percentage or big enough amount to cover that 46 cents. Because I could be right and still be wrong on the premium that I paid. I could be right in the direction, wrong in the premium. And that's not going to be good, because then your objective is that whatever you invest at the end of the day, if you're correct, you want to have more money coming back to you than you invested, right? Because it doesn't make sense for you to be right and then sell it for less than you invested. Then it's a loser. So question is, well, how much does it typically move the last hour? And if it moves up, how much does it typically move in the last hour? How often does it move up versus down the last hour? Could be another question. What are the extreme moves? Like if I buy for 46 cents, like how high can this go in the last hour of trading? Like, is my best case scenario historically, $1, 50 cents, $2? Like, what are my potential payoffs? These are all questions you may want to ask, and maybe looking at that historical data, you may want to strategize differently. Maybe a call spread would be a better strategy than just an outright call, right? So that's when we kind of want to look at the historical data to get an idea, potential ranges, tendencies and so forth. Okay. So that's what we're looking at when we do an intraday analysis. So what do we know here is that, there's an hour to go. This option will expire. We know what the straddle, you have about whatever dollar over dollar move in the straddle, away from 467. And, is that premium, is it too high? Is it too low? Is it right in line? And, how do I feel about it? So those are the questions we may have, and we may want to look back in history to get some of those answers. All right. So let's take a look at the intraday tool. And by the way, you can do this right from here, but I'm going to go to the intraday tool. You can run some of those analyses right from here, but let's just, for this example, we use the intraday tool.
AD, I sent you, Michael McRae asked about when you release new tools.
Yeah.
Is there a spot? I mean, do you announce? I know we talk about it here. He asked if a video or an email could go out explaining the tool. I don't know if that's actually, it says right up top. I'm looking, it says explain report to me. So it's right there.
Yeah. So you
do put it in places,
put
right?
on this. Yeah, it'll try to explain to you. But yeah, so by the way, tomorrow, we are doing a webinar on now this new tool. I'm just looking at it right now, and there are bugs on the new tool that I wanted to release tomorrow. And those bugs look like they're gonna involve a little bit of time to resolve. There are unexpected bugs anytime you have a new tool, and then if you use it in a different way, you get a bug. So we were gonna release a new tool tomorrow, and right now it doesn't look like we'll be able to. We're gonna have to postpone it. But I'm gonna do a webinar tomorrow with Interactive Brokers, and on my internal screen, I'm gonna reference that tool. And, because I know how to use that tool without creating the book internally, but you know, that tool hopefully will be published later this week. But the webinar will be on it tomorrow. All right. So the new tool that we're going to release on multi-leg trades. We're going to do a webinar at 2 p.m. tomorrow with Interactive Brokers. So you have to register with Interactive Brokers. We're going to discuss the tool, kind of go over it, and then we're going to make it available later this week.
Maybe the day we make it a level, we'll do that morning show. We'll just spend on that tool.
Yeah, and we'll spend some time on a morning show, and we do releases. Sometimes we do releases that you guys won't notice because we'll add something to a filter or something. So we can't, we do a lot of those that we're not going to send out an email each time we do something like that. But if it's a major tool, we try to cover it in the morning show. I try to, mention it in some emails, or we'll do like a webinar on it with Interactive Broker. So we try to, we do try to talk about it. And
well, plus you put this, explain the report to me on a lot of the pages, and you do videos on them too, that sometimes you link to the page as well. So there are spots to.
Yeah, and I'll do like a video on it. So yeah. But so SPR intraday. So this tool here produces intraday statistics on stock data. And in SPY, what we were talking about is the last hour of trading, right? So I'm going to set this time from 3 p.m. to 4 p.m. Okay. And what does this do is it looks back at our historical database, and it finds where did the stock, where was the stock at 3 p.m. and then where was the stock the same day at 4 p.m. All right. And it runs the statistics on that return. So instead of end of day, it goes from 3 p.m. to 4 p.m. Right. So where would this come from? I'm going to come back to this page, but if we look at the price action, right, like say regular hours, right, we have the stock data. Oops. Hold on, my computer now is slow for some reason. So we have the stock data, right, for each minute. We see what happened that minute with the volume, where was the stock, the VWAP price of the stock, the high, the low, the bid ask, and all that. So we have all this intraday data, and that's what we're going to be analyzing is the data, how the stock behaves, from one period, from one time frame to the next, but intraday. So let's come back to our intraday returns, and that's the data that it's using to run these stats. So let's go back to 3 o'clock. We're going to start this at 3 p.m. and go to 4 p.m. And that's what we want to run. So I'm going to run this from 3 p.m. to 4 p.m. I'm going to calculate it. And now this is going to go back and tell us these descriptive statistics on the returns. Okay. And here we have, some of the stats. Let's go through them, one by one. Initially, it looks at the absolute returns. And why? Well, if you want to know how much can the stock move, during that period, right? Because from 3 p.m. to 4 p.m., the stock, it's not going to move the same thing it would in a year or a half a year, or, how much can it potentially move in that one hour? Because we're not going to use like It's not going to move 30% like it would in a year, right? Or 10% like maybe in a month. There's a certain volatility that it will tend to move in that 1 hour. And the 3 p.m. to 4 p.m. could be more volatile than, like, say, from 12 to 1, or 1 to 2, because the final hour has more, trading volume and so forth. So the question is, well, how much can we potentially move in either direction, right? So to do that, we need the absolute returns. It goes back in history, looks at the percentage moves up, the percentage moves up, down, converts them all to positive moves, and takes the average. So on average, it moves 0.2%. And what it does for us is this multiplies, because this could be like 0.23, whatever. It multiplies it by the current stock price to say, from this stock price, that would equate to 90-cent move. That's what this is saying, a 90-cent move up or down. So just from my from memory, where that call price, call was priced, that average move, it would cover the call as long as we're right in the direction, right? So if we're right in the direction and it moves this amount, then it would cover the price of that premium and still leave room for profit. What about the median return? Well, the average return, it could, get pulled up by certain outliers, like, some really big percentage moves. So we want to see, well, what is the move right there in the middle? If we took half, if we took all the moves, right? If we took all the moves and then we split them in half, the top half and bottom half, what was the move right in the middle? That's the median. And we could see here that's 0.1, and that would translate to 66 cents. So even that, from my memory, I think that would have covered the cost of that option, 46 cents. I think it was a little bit under, the strike price, but it seems like that would, we could go back and look at it. It seems like it would have covered. I don't know how much room it would have left, above that, because obviously you want above that, right? If you're buying for 46 cents and the objective is, if the stock goes up, well, it's got to go up by a big enough percentage that it covers your costs and then some. So that's looking at the potential move in either direction. Here, this is looking at the simple returns. So the simple returns will take the average of all the positives, all the negatives, sum them up and take the average. So here we see that this is slightly, the average is slightly zero, but slightly to the downside, which means that there are two things there. Either it tended to go down slightly more than up, or that the moves to the downside when they were down were skewed lower. The magnitude of the moves to the downside were bigger than the magnitude to the upside, right? So from that perspective, looks like, the average was negative. And here it shows us the extremes. So the best move out of all our observations, so these are the observations down here. And I think if you go down, you could see the observations day by day. But what this is saying is, in our observations, the best move to the upside was 0.7%, which would translate to $3.43 move up. The move to the downside, the biggest one, was down 1.6%, which would translate to $7.70 move right now from the stock. So here we could see that it looks that the extreme moves, the one to the downside, was much bigger than the one to the upside. All right, so in the last hour, and we could kind of see that in a graph here. I think it was right here, probably this one. right? That really big move to the downside. And so even like these bars here, they represent the percentage move in the last hour. The red bars means the move was down. The green bars means the move was up. So if we just looked at, some of these extreme or large moves, right? Because the bars represent the magnitude of the move. All right. A lot of them look to me like they were red, meaning that those the bigger moves tended to be to the downside. Okay. What if we separated then? So what are we doing here? What if we just separated the up moves versus the down moves? What if we said, okay, if we're buying a call, we're not interested anymore the magnitude of the down moves alone. We don't want to know the magnitude of all the moves. So we're going to remove all the moves to the downside. And we're just going to focus on the moves to the upside. So when it goes up, right, how much does it tend to go up? Because if we're buying a call, that's really what, if we're already convinced that it's going to go up, if that's the exposure we're going to take on, then we want to know, right, if we're going to do that and we're right and the market goes up, on average, how much does it go up? Will it cover, the cost of that option, and how much more do I have potentially to profit on? So here breaks it down. So we're going to remove the let's say to the downside on average moves down 0.2 whatever 223%, whatever it is. So that would translate to 97 to the downside. But since we're not interested in the down move right now, because at that point, if you're buying in at the money, it doesn't matter if it's down a little or a lot. If it's out of the money, it's going to be worth zero. So if you're buying a call and it has to move up, and if it doesn't, it goes to zero. It doesn't matter if it's, if it closes at the strike, the option will be worth zero. If it goes down $1, the option will be worth zero. If it goes down $10, the option will be worth zero. So at that point, if we're buying a call, the downside move the magnitude of the downside move will not matter once you're at the money. So what we want to know is if it does go up, if we're correct, on average, how much does it go up? Because we need to cover that 46-cent premium. So this is telling us on average, the SPY when it's up, the average of all the up moves is 0.2 whatever, which it's translating to an 82-cent gain. So it would have been up. So closed at 467.92. And where was the stock? I think it was like 466.80 something, right at 3 p.m. It was right under 467. I think we were looking at the strike right under the 467 strike. That's the strike we were looking at. And the stock was a little bit below. So this kind of gives us perspective. All right, yes, that, if I feel strongly that it's going to go up, you're risking 46 cents in the premium, but you stand to gain, because 46 cents minus like 82. So these are from a historical perspective, some stats to give us certain potential moves based on, the stock's historical tendencies. Will, we're right up at 9:30, so I'm gonna end it right there.
Awesome job, D. For everyone, I'll put in the link. We have our webinar tomorrow. You need to register with Interactive Broker to come to the webinar. And if you can't watch it live, they have a great library of all the webinars we've done. Great job, D. Thanks so much, my buddy.
All right. Thanks, everyone, for joining. Stay safe out there. Have a great trading day. Hope to see you guys tomorrow.
Trade in peace, chameleons. Have a great day, D. Bye.